Hello everyone! Hello mga ka-accounting! Ito po ay pagpapatuloy ng discussion natin sa income taxes under International Accounting Standard number 12 or Philippine Accounting Standard number 12 on deferred tax liability. This is part 4 of 4 videos for deferred tax liability. Ano yung objectives natin sa video ito? We will discuss about the recognition of deferred tax liability. Number 2, measurement of deferred tax liability. And number 3 is the presentation of deferred tax liability. Recognition of deferred tax liability. PAS 12, paragraph 15 provides that a deferred tax liability shall be recognized for all taxable temporary differences. However, deferred tax liability is not recognized when the taxable temporary differences arises from A. Goodwill resulting from a business combination and which is non-deductible for tax purposes. Letter B, initial recognition of an asset or liability in transaction that is not a business combination and affects neither accounting income nor taxable income. Letter C, undistributed profit of subsidiary, associate, or joint venture when the parent investor or venture is able to control the timing of the reversal of the temporary difference. Measurement of deferred tax asset or liability. A deferred tax liability or deferred tax asset shall be measured using the tax rate that has been enacted by the end of the reporting period and expected to apply to the period in when the asset is realized or the liability is settled. For example, the tax rate of 30% is applicable to taxable year 2020. By December 31, 2020, a new tax law has been enacted imposing 25% tax rate effective taxable year 2021. The current tax liability or current tax asset is measured at 30%, but the deferred tax liability or deferred tax asset is measured using the enacted tax rate of 25%. Ganito yan mga ka-accounting. For example, for year 2020, yung rate ay 30%, but before the year end or at the year end, there is a new enacted law that the rate is 25% the following year. So, yung current liability mo or current tax asset is multiplied by your current rate of 30%. Paano kinukompute? Ito yung paano ito yung taxable rate mo times 30%. But the deferred tax liability or deferred tax asset is measured using the enacted tax rate of 25%. So, kung mayroon kang deferred tax liability or deferred tax asset, yung gagamitin mong rate yung effective na next year na 25%. Presentation of deferred tax asset or liability. PAS 12, paragraph 70 provides that when an entity makes distinction between current and non-current assets and liabilities, it shall not classify deferred tax asset as current assets and deferred tax liabilities as current liabilities. Accordingly, a deferred tax asset shall be classified as non-current asset and a deferred tax liability shall be classified as non-current liability regardless of reversal period. Moreover, a deferred tax asset or deferred tax liability shall not be discounted. So, yung presentation ay non-current asset siya or non-current liability. Offset of deferred tax asset and liability. Under PAS 1, assets and liabilities shall not be offset unless required or permitted by another standard. PAS 12, paragraph 74 provides that an entity shall offset a deferred tax asset against a deferred tax liability when A. The deferred tax asset and deferred tax liability relate to income taxes levied by the same tax authority. And B. The entity has a legal enforceable right to set off a current tax asset against current tax liability. Thank you.